From VOA, Learning English, this is the Economics Report. China is looking to stop low-cost vacation tours that force tourists into costly stores. The tourists buy the tours at reduced prices, but then they are expected to make costly purchases at stores while on the trip. The stores then give money back to the travel company that sold the low-cost trip. Sometimes these agreements lead to conflict between tour guides and tourists. China's National Tourism Administration says it is looking at possible fines for tourists that buy the discounted trips. In the past, China has fined the travel companies that offer the trips. But that action did not reduce the number of tourists tricked into going to expensive shops. The Chinese tourism officials say they hope that fining tourists will stop this kind of discounted travel. The new plan follows the recent death of a 54-year-old tourist in Hong Kong. Chinese officials said the man from mainland China was beaten near a jewelry store last week. He reportedly died of a heart attack he suffered during the beating. The reports also said the tourist was trying to stop a fight between tourists and tour guides. The guides reportedly were angered when the tourist refused to make purchases at the jewelry store. In many countries, including the United States, tour buses commonly stop at souvenir shops and gift stores. These shops mainly market to visitors. The goods for sale are often overpriced and of poor quality. For VOA Learning English, I'm Jonathan Evans.
From VOA Learning English, this is the Economics Report. Investors in Hong Kong and Shanghai may now invest in a limited group of securities on either stock exchange. Chow Chung Kong is the chairman of Hong Kong Exchanges and Clearing. He called the move a breakthrough in the opening of China's financial markets and an important milestone in the development of Hong Kong. The Shanghai-Hong Kong Stock Connect gives investors the ability to buy stocks listed in mainland China. It also permits Chinese investors to buy stocks listed in Hong Kong. There are limits, however, to the value and the kinds of stocks that can be traded. Investors may trade only a total of $3.8 billion worth of stocks each day. Julian Evans Pritchard is a China economic expert at Capital Economics based in Singapore. He told VOA's Victor Beattie that the move to open the stock exchanges to each other was important. But Mr. Evans Pritchard noted that the total value of stock that can be traded is a relatively small quota, about 1% of total market value. Mr. Evans Pritchard says if the quota is filled, officials may see a reason to increase it over time and open up the exchange further. The stock plan represents a limited reform measure. Mr. Evans Pritchard says what is important is that China is opening up its capital account to foreign investment money, which can come in or go out. China's stock market offerings have had limited success in recent years. The biggest public stock offering by a Chinese company, Alibaba, took place on the New York Stock Exchange rather than within China. For VOA Learning English, I'm Carolyn Prasuti. From VOA Learning English, this is the Economics Report. China's highly controlled currency, the yuan, recently dropped 2% in one day, its biggest drop in 2 decades. That was followed the next day by a 1.6% drop in value. It took place days after China announced that exports had fallen in July by more than 8% from the previous year. Chinese officials say their devaluation of the currency will let markets play a greater part in setting the value of Chinese money on international exchanges. However, experts say the devaluation also will help Chinese exporters. Markets reacted to news of the decline in the yuan's value. Stock market measures in Asia went down. The value of the Chinese yuan has been slowly rising for 10 years. Some experts say the recent losses in China's stock market have also played a part. The yuan has been stable against the US dollar for a year, averaging just over 6 yuan to the dollar. Other currencies, however, such as the euro and Japanese yen, have weakened. That has put pressure on the yuan and hurt Chinese exports. Economist Brian Jackson is with IHS Economics China Regional Service. He says that over the past year, the increase in value of the yuan has meant that exports from China to countries besides the United States have cost 13% more. The People's Bank of China says it is trying to make the currency more market-oriented. Now, the daily level for the range of trading is based on a group of major currencies and the value of the yuan at the close of trading the day before. For VOA Learning English, I'm Carolyn Prasuti. From VOA Learning English, this is the Economics Report. China is working to deal with a volatile stock market and slowing exports. These issues are continuing to influence world markets. China's benchmark stock index, the Shanghai Composite Index, has been decreasing since June, when it reached a high of over 5,000 points. Now, the index has decreased more than 40%. Stock prices have lost and gained value sharply. Recently, financial markets around the world have shown increased volatility, partly influenced by China's economic issues. China has taken several steps to try to stop slipping share prices. The People's Bank of China made more than $23 billion in short-term loans available to banks and investors in late August. In July, stock exchanges stopped trading of 1,400 listed stocks to keep prices from falling. China's central bank also made borrowing easier to support the economy and stop the sharp decreases in its stock markets. The bank reduced a main interest rate by 0.25% to make borrowing easier. Chinese officials devalued the country's currency, the yuan, in early August. Within 2 days, the yuan lost more than 3% in value. That reversed years of slow increases in the exchange rate of China's currency. The devaluation came on growing evidence that China's economy is slowing. China reported that its exports in July dropped more than expected. On September 1st, an official measure of manufacturing activity hit its lowest level since 2012. For VOA Learning English, I'm Carolyn Presutti. From VOA Learning English, this is the Economics Report. The last 2 months have been difficult for investors in China's stock markets. Major stock indexes, measures that track share values, all had big decreases during the month. This left many people questioning what China's stock market problems mean for its economy and the world. On July 27th, the Shanghai Composite Index dropped more than 8% in value, its largest single-day drop in 8 years. In June and July, prices dropped, although the government put a number of measures in place to keep prices from falling too far. These included lending billions of dollars to stock trading companies, having pension funds increase stock holdings, and threatening short sellers with legal action. Short sellers make a profit by trading stocks that are decreasing in prices. The State China Securities Finance Corporation then said it will continue to buy stocks to stabilize the market. The People's Bank of China also said it would place over $8 billion into money market funds, which are considered safe debt investments. Companies have also canceled plans to sell new shares on exchanges. And at one point, more than 1,400 companies requested that trading in their shares be halted. However, China's stock market is not closely connected to its economy. The Associated Press recently reported on a study by the Southwestern University of Finance in Chengdu, China. It said only 8.8% of households in China are involved in the market. That is much lower than the percentage of households in the U.S. with stock investments. For VOA Learning English, I'm Carolyn Presutti. From VOA Learning English, this is the Economics Report. Investors in the United States are preparing for the first public sale of stock in the Chinese company Alibaba. The company sells goods by linking buyers and sellers in the huge Chinese online market. Alibaba is expected to make its initial public offering, called an IPO, in September on the New York Stock Exchange. The total value of the company, based in Hangzhou, has been estimated at about $200 billion. Reports from Bloomberg News say Alibaba is offering investors a 12% share of the company. That would mean the company could raise more than $20 billion in the public stock sale. After the IPO, Alibaba could become one of the most valuable technology companies in the world. The e-commerce company is responsible for most online sales in China. It dealt with more exchanges last year than U.S. companies Amazon and eBay combined. And it has more than 230 million active buyers. Scott Kennedy is director of Indiana University's Research Center for Chinese Politics and Business. He says Alibaba has grown from a very small company 15 years ago to the main online seller in China. The company holds about 80% of the Chinese online sales market. Scott Kennedy says the company is profitable, which is unusual for a technology company first offering an IPO. Alibaba has chosen to sell its stock to the public on the New York Stock Exchange rather than in China. China is now the world's second largest market for e-commerce. For VOA Learning English, I'm Carolyn Presutti.
From VOA Learning English, this is the Economics Report. Hilton Worldwide is selling the Waldorf Astoria Hotel in New York City to a Chinese company for $1.95 billion. The buyer, Anbang Insurance Group, will pay one of the highest prices ever for a U.S. hotel. Hilton Worldwide says it will use the money from the sale to buy other hotels in the United States. As part of the deal, Hilton will continue to operate the Waldorf Astoria for the next 100 years. The Chinese buyer has said it will invest in remodeling the famous property on Park Avenue to bring it back to its historical grandeur. Reports say the deal is the largest for a Chinese company buying a U.S. building. Chinese investors increasingly have become interested in U.S. properties. Homes, especially costly ones, are considered a good investment. The National Association of Realtors says Chinese spending on homes in the U.S. has increased sharply. The trade group estimates that Chinese buyers spent $22 billion on real estate properties in the 12-month period ending in March 2014. That is an increase of 72% over the 12-month period before. Chinese companies are also increasing their interest in businesses outside of the energy and raw material industries. Last year, a Chinese company bought Smithfield Foods, the largest pork producer in the U.S., for nearly $5 billion. China holds about $1.2 trillion in United States Treasury securities. While these investments are safe, they do not give high returns or yields. China has increasingly looked for other ways to invest its huge trade surplus with the U.S. For VOA Learning English, I'm Alex Villarreal.